Hey everyone, welcome into today's webinar. We got a great one set up for everyone today. Going to be talking to two experts in the crypto spot product space. So, just to set the scene, some investors like to take a pretty active approach to markets. That's where, actionable research services like ours come in. For example, I did just send out a flash insight a few minutes ago, given the turmoil in crypto markets right now. Make sure you check that. But there are a lot of investors that prefer a more passive approach. They're simply looking for low cost beta exposure, normally through index-based ETFs, to achieve that exposure. And in crypto, that's historically been somewhat difficult, mostly due to regulatory barriers. Also, you could probably attribute that to, let's say, a lack of provably sustainable things outside of Bitcoin. But, with recent changes on the regulatory front, advances on the technology front, we've seen a wave of new products hit the market, and we've seen a lot of demand for exposure to things outside of crypto. And now we're even getting ETFs that track baskets of assets. And we can actually create products that track the overall market. And this opens the door for long-term investors to consider exposure to the broader crypto market that encompasses things beyond just Bitcoin, in a way that really has not been possible before. And one of those broad index-based products is Grayscale's CoinDesk Crypto 5 ETF. It tracks the top 5 crypto assets by market cap, with some nuances that I think we'll get into. The fund was recently uplisted to an IC and converted from an OTC traded product into an ETF. And I'm excited to talk about that today and talk about indexing in general. And also excited to be joined by Krista Lynch, SVP ETF Capital Markets at Grayscale, and Andy Baehr, Head of Product at CoinDesk Indices. Andy is a 3-time repeat guest here. So always great having him on. He's earned the title as 3-time repeat guest.
Fantastic.
Well, look,
get a T-shirt or something or a hat.
Yeah, no, we'll have to send you something after this. Send you some merch. It's actually it's a crime that you don't have any Fundstrat merch yet.
I'm easy that way.
But yeah, look, we're going to talk about GDLC, which is the ticker for that fund. We're going to talk about the mechanics of crypto indexing, how it compares to equity indexing, and I'm hoping Krista can give us a good, succinct answer as to why investors might be interested in this ETF, and perhaps we'll also touch on the future of crypto indexing and how that might affect market structure going forward. But with that, let me officially welcome Krista and Andy. And before we dive in, I know most folks are probably familiar with Grayscale and CoinDesk, 2 stalwarts in the industry. But for anyone newer to the crypto space, it'd be great if you could each give everyone a quick background on your firms and your roles there, and we could take it from there. Krista, why don't we start with you, and then we'll go to Andy.
Sure. Thanks so much for having me. And hopefully I get, invited back so I can get that 3-time repeat statue as well, our trophy. I'm Krista Lynch. I lead ETF capital markets at Grayscale. Grayscale is a leading asset manager in the crypto space. And I work primarily with institutional partners like authorized participants, ETF market makers, and crypto liquidity providers that support our products and market.
So, Sean, and good to see you, and Krista. It's a delight to be on here with you. I'm Andy Baehr, so I lead product and research at CoinDesk Indices, which is part of CoinDesk. CoinDesk is as you say, a stalwart in the industry for media, journalism, consensus events, and of course our index business, which has been working with Grayscale and other institutional asset managers and exchanges for more than 10 years. We are now owned by Bullish, which operates an exchange and other businesses, and it's great to be part of the Bullish family. The CoinDesk Bitcoin price index started ticking once a second almost 11 years ago now. We currently support over $41 billion, although that may be less today given the way the markets are moving, but let's say $40 billion of assets under management plus a bunch of volume, and we have flagship indices like CoinDesk 5, which we'll talk about today, and CoinDesk 20, as well as sector systematic, and thematic indices. So it's great to be here and super duper excited to see the uplisting of GDLC, which we've worked on for many years with Grayscale, and giving folks the opportunity to allocate passively into digital assets.
Yeah, once again, congrats to both of you on that uplisting. Definitely a long time coming. So why don't we talk about GDLC? Chris, I know I already gave some background, but maybe you could put a finer point on it. What is GDLC? What does it hold today? And I guess why would somebody want to own this thing?
Yeah, well, we're super excited to have GDLC in market as an ETP, and it's only as of last Friday that we can say it has attained that ETP status. But GDLC was actually a product that was investable going back as early as 2018. So similar to a lot of our other private placement vehicles that have seasoned and become ETPs, this was envisioned many years ago as a way for investors to passively get exposure to multiple tokens. Now that it's in ETP form, this is really the first of its kind hitting markets in this capacity. And it's a way for investors to get access to the top 5 crypto assets by market cap, excluding meme coins and stable coins in one simple wrapper. So similar to the experience of buying any other ETP, you now can get exposure to about 90% of the crypto universe in one product. Why we think that's appealing is it's really a great way to organize all the chaos in the crypto space today. There's thousands of tokens out there, thousands of investment opportunities, and I think that the market has gotten comfortable with Bitcoin, and a lot of investors are saying, okay, what's next? And it can be a bit daunting to figure out which tokens to select. So with a product like this, you can lean on an asset manager like Grayscale and an index provider like CoinDesk to do that work for you.
That's great. And perhaps not, this might not be super material to the conversation, but I'm curious, you did correct my nomenclature, ETF or CTP. What is the delineation there?
Yeah, so technically I must say ETP, which is an exchange traded product. ETF is really like the colloquial terminology that I think most people know and recognize, but in order to be compliant, I will call it an ETP. But I think for purposes of this conversation, we can refer to it as an ETF or an ETP.
Understood. That's great. So Andy, can you maybe, so you're the index guru, could you provide a breakdown of the index constituents, what the inclusion criteria are, and how they're weighted?
Yeah, no, for sure. This index intends to, the objective of this index is to capture the largest and most liquid digital assets. Like many of our indices, it rebalances quarterly. Let's just go back to what it means to be a digital asset indexer. Unlike other asset classes, there's no consolidated tape. For crypto, you don't just grab closing prices off of an official exchange at 4 p.m. whatever time. You really have to go and capture prices from a number of different centralized exchanges. You have to evaluate those exchanges to see how accessible they are in different jurisdictions, how reliable their pricing is, what kind of volume contributions they can make over longer periods of time to try to detect or to try to lend some tamper resistance to your reference rate pricing. So everything starts with gathering the right exchanges. And then when it comes to building an index like this, you want to ensure that, first of all, people in each important jurisdiction, especially or not excluding the United States, will be able to have access, right? So if you include tokens that primarily trade in exchanges where U.S. investors have difficulty accessing that index is going to have implementation difficulties that we want to avoid. So not only in terms of exchange listings, but in terms of pairs as well. The reference rate that we use for these and other flagship indices incorporate pairs that trade against US dollars, so Bitcoin USD, but also pairs that trade against USDC. So Bitcoin USDC volume on eligible exchanges will be included in both the volume contribution, which will help to promote candidates into the index, but also to ensure that there's ample liquidity. We find more and more institutional members of the community really like to look at both of those pools as liquidity and aggregate them as their kind of home base. So looking at those two sets of pairs, looking at a very considered and reviewed and monitored set of exchanges. We get our prices coming in, and then we do our selection for the index, which takes basically a pool of the most liquid names. We start with liquidity first, out of a pool of the top 250 names. So we take a very, very, very big pool. We look at the most liquid names within that pool, and then we select the index from there, making our exclusions for things like meme coins, stable coins. And then we create the index. It's part of a family that includes a bunch of different market indices cored around the CoinDesk 20. So the CoinDesk 5 is, strictly speaking, the largest 5 names within the CoinDesk 20 index, which keeps all of our products kind of in a very similar kind of evaluation and construction framework. So this is done by our team, which is regulated in the UK under the BMR framework, which has an index and governance framework that's been in the market for many years, and rebalances once a quarter with some buffers in place to make sure that bottom names don't flip in and out of the index too frequently, because that's just kind of noise. So what you end up with is a product that can evolve over time, has evolved over time, but represents, as Krista pointed out, a very large portion of the overall market cap of the digital asset class, and sort of carries over a lot of the same fundamentals that you would want to see in an asset class passive allocation type of index. So this index has been around for a long time. Krista and I both know that this index and the product were both oriented around a large cap theme previously. And in fact, the fund was called the Large Cap Fund before its uplist. We think of large cap being more of an active choice rather than just the market. And as the market has evolved, we can go into this in greater detail, and Krista will have some great thoughts around this. Really kind of recasting the index as the CoinDesk 5 and recasting the product as the Grayscale CoinDesk Crypto 5 really gives it a new and more, I guess, modern life as an asset allocation instrument rather than a large cap tilt instrument. So we're delighted with this index. It's one of our oldest multi-asset indices, and we sure feel good that it is trading on the New York Stock Exchange as an ETP.
Yeah, so I'm unsure if anyone has said it yet. So folks are probably very familiar with this market up until very recently, where we've seen better, broader participation. Folks have viewed a lot of the equity market rally as being top heavy, but I think people don't understand how top heavy the crypto market is. We're kind of betting on the fact that you do have, increasing breadth and participation in projects, encompassing a larger percent of that crypto market cap. But it happens to be a large cap ETF, but it really is a good portion of the overall crypto market.
Yeah.
Do you know what the exact number in terms of percent of the overall crypto market GDLC is right now?
I'm sorry, go ahead, Krista.
Our latest calculations have been 90%-ish. So you're really getting huge coverage with just 5 tokens. And as Andy was saying before, it's also going to rebalance. So investors that want to maintain that exposure to about 90% without having to take any action themselves, even as other coins come up in weights or down in weights, they won't have to take any action. We will do that for them.
Yeah, and I think you're getting that very high participation of the asset class. You're actually also retaining the shape of the market. We know that Bitcoin dominance is something that even casual digital asset class observers have become familiar with. And, some of our other indices kind of make more active choices about how to balance the constituents. But CoinDesk 5 and GDLC observe and respect the shape of crypto right now. There's really no active bet in there. It's just an index that's designed for implementation at scale, reflecting the shape of the market and reflecting the top 5 names of size and liquidity to help give investors that kind of core participation. So right now, Bitcoin may be in the low 70% of weight within the index, but that fluctuates quite a bit. I have some kind of interesting statistics. So the index has done quite well this year, but and if you look at the attribution of the indexes and the fund's performance year to date, about 70% of the performance comes from Bitcoin, But if you look at the period since June 30th, since the end of the first half of this year, over 50% of the performance has come from Ether. So this brings one kind of key point for people who are kind of coring their crypto exposure with Bitcoin, that you miss these kind of big rotations. And 2025 has been a year of big rotations. So I think, rethinking your core position, or if you're a passive investor, your passive position to CoinDesk 5 and GDLC starts to make a lot of sense.
Yeah, I think that's right. And look, I know we were pretty early to the ETH rotation that we saw. ETH had, it really had been a dog for most of the bull market, but
It had been tough.
some signs of that rotation happening were starting to emerge in April, May. If you're not paying close attention, you're not subscribing to research services like ours, you don't have a large percent of your allocation to crypto, you're probably not going to catch that. And I know for a fact that a lot of folks,
right,
crypto native funds did not catch that. A lot of
folks
caught
you're not going to catch that, and I want to pick up on that a little bit, because one of the things that in our common background is systematic investing, and part of my background after being in the derivatives world for a long time was at a systematic hedge fund. And one of the things that you kind of try to pick up is you're happy to spend time and money on alpha, but you probably shouldn't be spending too much time and money on beta. So if subscribers of Fundstrat were taking tactical ideas and cues from newsletters, which many should do, right? That should overlay a core position, right? So you have either a portable alpha strategy or a core plus satellite strategy. And I think that given the narrative dominance and Bitcoin dominance, that core strategy probably was either Bitcoin or Bitcoin plus a little bit of seasoning. I would argue that CoinDesk 5 makes a really interesting and compelling index to look at, which has been the very, very similar construction for the last 7 years, as that core position around which to put the kind of tilts that your subscribers might receive from your research. So, passive allocation to digital assets is obviously a key and core objective of GDLC and a great use case. But using it as a core portfolio around which to rebalance ideas, and to maybe add a little bit of Ether to an existing core Ether position when you sense a rotation's happening might be also appropriate. So I would challenge some of your, loyal subscribers and users of your alerts to think about that kind of core plus alpha approach, and see if, run some back tests and see how they would have done, because at least you're capturing that kind of market cap trend element within the index as part of the core.
And I might add to that too, if I may quickly, that as an individual trying to capture that, it can be quite costly to be trading all the time. But a product like this is going to be able to lean on the institutional excellence and connectivity of a large asset manager. So again, you're going to be able to make those rotations in a much more cost-effective way.
Yeah, I completely echo those sentiments. I think my view is that folks should always have beta exposure to the market, right? And I know a lot of folks, you shouldn't overpay for that. And that is the perk of this product, and just ETFs in general. They've provided an amazing resource for investors to achieve that type of exposure. And broadly could not agree more. So Andy, just to close the loop on the index inclusion criteria. So right now it is size, access for U.S. investors, and liquidity, right?
That's right. Yeah.
Do you foresee, given regulatory changes and potential clarity around perhaps some, we'll call them fundamental metrics of these underlying platforms, do you foresee indexing changing to shift more towards what we see in equity markets around earnings, or something? So whatever we determine to be the equivalent for on-chain networks.
I'll hopefully elicit a sympathetic smile from Krista on this one, but in the indexing world, when you have a lot of smart, curious, excited people, it's really easy to be too early for just about any good idea. And I think when I joined CoinDesk 3 years ago, we had a very already stood up a really elaborate, well-designed, well-constructed taxonomy of 500 tokens that was updated every month. And we've continued to curate that. We're looking to kind of think about the right way to rationalize it. But sectors and taxonomy and fundamentals have always been, with the availability of data and great data platforms like CoinDesk Data, you can really, to your heart's content, you can think about different ways to mix and match names and come up with interesting portfolios. On the other end, we're just trying to spend the last 18 months trying to get people to understand what Ethereum is, right? And to try to stop thinking about crypto as Bitcoin and now I'm bored, right? So getting a market beta product into an ETP form is a great first step to meeting people where they are right now. I should point out that the announcement of GDLC's uplisting was in the same press release with the SEC as the generic listing standards. It's kind of interesting to note that GDLC's uplist had nothing to do with the generic listing standards. It was a 19B4 that the New York Stock Exchange filed, and if you read through that press release, GDLC and CoinDesk 5 Index were mentioned in that as being specifically approved. So this was really an individual battle, not to ride the coattails of generic listing and utilize that framework or that restriction. It was really an effort to try to get this particular product with this particular index into the hands of ETP users. So I think it's really going to become one of these, utilities that becomes critical market structure for investors and allocators and benchmarkers and, anybody who really wants to sort of shift their mindset from Bitcoin to the digital asset market. Where do we go from here? We have indices that are oriented around liquidity and trading and higher volatility. We have systematic products that take advantage of time series momentum. We have broader indices that go the CoinDesk 80, which is a little bit more of a prosumer product, goes from token 21 to 100 and has some really interesting performance characteristics. And we have a 50 token meme coin index, which is maybe the last index in crypto that still moves over 100 vol. So there are a lot of things awaiting those who want to dive a little bit deeper and still look at liquid indices. For many investors and for our cherished, I guess, population of 5%ers, people who will allocate maybe 5% of their time and their portfolios into crypto, GDLC and CoinDesk 5 are kind of a great home base for that core allocation.
That's great. Yeah, I'm going to have to go back and look at that meme coin basket performance.
Perhaps
Perhaps that's the one exception to it. It's probably not where you want that
coins.
Long-term low-cost beta exposure.
No, 50 meme coins, equal weighted basket. So hang on tight.
Love it. Krista, back to you. What does interest in this product look like right now? Who is coming to you with to have conversations around this, integrating this product into their portfolios? Where are we on that adoption cycle?
Yeah.